Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our stock market weekly recap for June 17th through the 21st, 2019. I like to take a look at last week's changes, which are up currently. We're going to go over the four main indexes, take a look at whether they went positive or negative, look at stock futures currently going into Monday. You saw that at the very end of Friday, the stock market sold off there a little bit, so we'll see where futures are currently looking at, but that can all change over the weekend. We will take a look at the entire S&P 500 movement for the week, what sectors were weak, what sectors were positive. We'll take a look at financials, home builders, semiconductors, the oil. Oil took off this week. I know a lot of investors were looking and buying into oil. We're going to look at the silver, dollar, gold, and bonds, and then finish it off looking at mortgage rates. And of course, I do make these videos every single week to create historical reference videos, kind of going over what is in the market, what did the market perform at. And I really like to just kind of keep track on a week by week basis of what the market does. And this week, the Fed came out Wednesday saying, hey, we're not going to be cutting rates. We're not going to be raising rates. We're going to leave it where it's at, which is perfectly fine. In my last week's recap, I said this is going to be stock market positive. We're going to have a very good week this week because they're not going to cut rates. But because of that, that is still showing that the economy overall is very strong, and we have much more upside potential because guess what? Fed doesn't cut rates right now. That shows it's positive for the companies. They're doing well overall. They don't have any reason to cut rates, so market moves higher. It hit all-time highs. Let's go ahead and bring up the S&P 500 now. Market closed at all-time highs on Thursday. It broke to the highest point it's ever been. It did pull back slightly here on Friday, but overall for the week, we can see here Monday closed, gapped up quite a bit here below 2900, over 2920 on open, so a gap up of nearly 1%. It did sell off a little bit towards the end of the day, but that's fine. We still ended up 0.97%. Wednesday we traded higher. Now Fed was coming out Wednesday saying, you know, what they were going to say. They came out, you can see here the market basically trended all the way sideways. Fed came out saying, hey, we're not going to be cutting rates, we're not going to be raising rates, we're going to be leaving it exactly where it's at. Boom, stock market positive. And then on close, another huge gap up here. Now Thursday, it did kind of trend down during the midday. I saw a lot of investors kind of going, I jumped into ticker symbol SQQQ, thinking that the stock market may pull back slightly, maybe a 1-2%. I was looking for maybe a 2% gain here. I did buy in at some point here. It's an inverted ETF. I don't recommend anybody buy into it. And I purchased, and I actually ended up having to sell into the negative here towards the end of Friday. While we were doing this little sell-off, I took advantage of it, kind of got rid of it. I didn't lose a whole lot, but I basically nullified my gains in one of my accounts between what I had made and what I had lost for the week. So not great there, but overall for the week up 2.2%. I believe next week we are going to have a little bit of a cool off. I don't know if we will lose too much, but I do believe we're basically either going to be flat or we may lose about 1% or so kind of going into next week, and that's expected. We had a huge run up this week after we've already had 3 consecutive weeks of just positive. Dow Jones here came in second place this week, up 2.41. So S&P came in third place, up 2.2. The Dow Jones came in second place, up 2.41. Basically the same movement. Everything Monday at close pop up, Wednesday on close pop up. Fed came out midday Wednesday, popped it up, and basically kind of sold off towards the end of Friday. Up for the year 14.57. This is in last place as far as year to date growth, but overall this week second place as far as 5-day change. Nasdaq is in first place this week, put on 3.01%. Huge run up there on Tuesday, gapped up nearly 1.39%. Friday, you know, sold off along with the rest of the market there. Open lower. Semiconductors were really weird here on Friday, but overall 5-day change up 3.01%. That is an amazing thing there. So actually it was SQQQ, which tracks the Nasdaq. It was the Nasdaq. I believe UPRO is with the one. Now that's the positive S&P 500. Either way, that Nasdaq here up 3.01 for the week. And in last place as far as the main indexes, we have the Russell 2000. Now this one had some of the same movement here. We can see Monday gapped up. Wednesday after the Fed came out, shot higher. Wednesday after close, shot higher, but because Feds decided not to raise rates, the dollar began to sell off pretty hard. It went into the negative for the week. So Russell 2000, a lot of small mid cap companies. If that dollar weakens, that weakens a lot of the smaller mid cap companies here. And we can see that as of Thursday at open, it opened up probably about 0.75, sold off and closed about 0.51. It did sell off almost 1% on Friday, and I believe that's kind of with the dollar. And we can actually bring in the dollar here in just a minute. So here's the 5-day change for the dollar, and we can see some of the same movements here. Fed came out here on this date on Wednesday, and the dollar just got weaker and weaker throughout Thursday and Friday, and that's basically sort of the same trend line here with the Russell 2000. So if the dollar gets weaker, that's generally going to bring your smaller mid-cap companies down with it. Stock futures are currently looking negative. That is because we did sell into Friday. At the very end of the day, Friday, we sold off, and we're going to see a lot of companies here in the after hours that are actually showing a little bit of negative. We have down towards the bottom here, the most active stocks. These are some of the ones that I take a look at just to see financials and technology, semiconductors in here. So Bank of America down 0.14. Another one here I like to bring up is Apple. Apple kind of selling off here in the after hours, down 0.37%. Chesapeake Energy, not so much important. Oracle had a pretty high run up, I believe, this week. I believe Tuesday. I think they did earnings this week. I wasn't tracking them all the way. AT&T. Overall, it's sort of mixed. We can see a couple eBay, Wells Fargo. So some financials. A lot of the financials are actually down for the week in there. We'll just bring in the S&P 500. Now this website, if you haven't checked it out, it is finviz.com. Great website for just taking a look at the entire S&P 500 as a whole. Now this is the 1 day performance. So here you can see the technology sector, you can see consumer goods, you can see biotech, healthcare, financials over here, oil up top, and basic materials. Now you can see on Friday a lot of the sectors were pretty much in the red, and that is because we did sell off from midday until the end of the day. It was a bit of a sell-off in the market overall. We can see as far as the 1 week performance, you can see that there was a lot of red out there. So Friday we just kind of, the little engine that kept chugging just stopped chugging, and we kind of just fell back just a little bit for the day. Overall, Google up 3.6%, Facebook up a massive 5.41% in a single week. So Apple, which was trading down in that $140 range just a few months ago, has basically gained $50 just within a short amount of time. Adobe, Oracle, here we can see Oracle for the week up 5.33, Adobe 9.13, Salesforce up 4.55, Intuit, which is that not tax slayer, it is TurboTax, up 2.9. So overall, lots of tech stocks. Microsoft up, doing really well. Technology, the telecom, not doing amazing. AT&T for the week up 0.31. Verizon down slightly. Now oil, if we take a look over at oil, we have Schlumberger up 8.21 and a few others there up anywhere from 6 to nearly 14% there. We can take a look even at Exxon, at Chevron. Exxon put on 4.49. Chevron, brand new stock in my portfolio, up 3.41% for the week. Biotech also taking off. I'm looking for Avi. Okay, so Avi hasn't been putting it on here, up 0.11%. Pfizer, Johnson & Johnson, all doing really well there. Financials, so here financials overall didn't do so well. The best performer this week was Wells Fargo, but overall, the sector ETF, which tracks the financials, it is ticker symbol XLF, which we'll cover here in just a minute, did actually end in the negative for the 5-day change. Apple up 3.13. So I sold out of Apple last week or the week before, and I moved into Google because I believed in the short term. Don't think short term, but Apple is at 198. It began to sell off around 203, 207. I believe right now we're at a really high run up for Apple, whereas Google for the year, if we take a look at the year-to-date performance, I was trying to kind of move back from Apple just a little bit because my portfolio is heavily invested in Apple on my IRA, and so I do have still some shares of Apple, but I did move and pick up about 4 shares of Google, and it's actually positive now, about 7.7% for the year, but I picked it up and it's actually up about 7 or so percent in my portfolio. So I picked it up near in the negative for the year to date. So it is looking like it is coming back, and that's why I'm beginning to kind of buy up. I may buy up a couple more shares of Frugal, but we shall see. And that's pretty much it for the year to date there. Now, jumping on the financials again, financials basically flat. Wells Fargo helped them out. Everything across the board is basically either flat or negative, pushing the overall financial exchange traded fund down 0.07. Semiconductors, that helped out the Nasdaq, that 3% for the Nasdaq. Semiconductors at 4.13. Home builders rates, they are going down, but because rates remained unchanged this week, I think that kind of affected home builders, and they actually fell down 0.89% for the week. Oil, if you want to take a look at exactly what took place here with oil, go ahead and pause the video, read through your Monday, Tuesday, Wednesday, Thursday activity, but there was a lot of turmoil out there as far as oil. We can see oil rising 2%, oil rising up here and there. On Friday, President Trump came out saying that he had stopped the attack on the Iran. They're going to be bombing. He wanted to know how many casualties there would be. There'd be roughly about 120. He didn't want to take any casualties, and he called off the attack, or the mission, or whatever, the strike. And we can see that the turmoil between the U.S. and Iran is really helping push oil higher here. So up 9.41% here in a single week, putting it at a year-to-date up 23.91. Now, oil has been on a crazy run here recently. We could see we were up nearly some 30% in April, I believe that's what it was. It was like 39%. We had a massive sell-off, putting it down below that 11 point. It looks like, man, I'm not sure in the short term. Let's take a look at the 3-month. So it was down in that 11, and now it's trading maybe in that $10 range, but now it's $11.97. We can see here that for the highs, oil's up in this 1350 plus range, and we may continue to reach higher with oil as the sort of chaos continues and between the little states and such and other countries. So dollar again selling off after the Fed came out saying, hey, we're not going to be raising rates. We may do a cut in the future, and cuts, that puts more money in the market, that deflates the US dollar, makes it weaker, and that kind of affected the dollar here in the short term, and that's probably what affected the Russell 2000. But silver and gold and bonds positive this week. Remember, anytime you see silver, if you are a silver investor, I don't invest in silver or gold myself, but I've always been told if you want to buy silver in the short term, look for it below $14. So a week ago, it was trading at $13 and some change. Here over the last 5 days, up 3.24%. Year to date still negative, down 1.10%. Gold put on 4.28. Guess what happened right here? Fed came out saying, hey, we are not going to be cutting rates right now, but we're not going to be raising rates. And because they left it open-ended that they might raise or they might cut rates in the future, that it's all getting priced into the dollar, that it's all getting priced into gold. And when the dollar or when the rates do get cut, that puts more money out there. It's quantitative easing. They push more money into the market, drives the dollar down, drives yields lower, and drives gold up. So gold put on 4.28%, year to date up 8.85%, and bonds going higher here, 0.45%. So very interesting here in the short term. Mortgage rates continue to kind of come down just very slightly. I've seen investors over in the Facebook chats talking about getting mortgages in the 3.25% range on 30 years on their first like FHA or conventional loans. So that is very nice to see that rates are coming down. Imagine if they do another price cut. I don't know if that'll affect mortgage rates right away, but I'm sure maybe in the future, once they do a rate cut, then sometime maybe down the line, we may continue to see rates drop into even further down. That would be crazy. My rate, I have a locked in rate on my 30-year home. On my own personal home at 3.75. My investment properties are locked in at 4.75. So there's a little bit of a difference there between personal and real estate investment property. So that is basically all I wanted to cover as far as the market. Now, if you guys would like to hang out with me just a little bit further, I'll cover a little bit of news that I posted over on Facebook this week. Again, I do want to thank you guys for hanging out, checking out the video, and let's go ahead and go over what was posted up this week. So, you are never too young to start an empire, and you're never too old to start a new dream. I thought this was really nice. I saw that kind of posted somewhere. I thought I would share it. No one else is caring more about your future or the legacy, the empire, what you want to create and do for yourself. So definitely take some action, go out there. If you want to start a business, if you want to start investing, if you want to do XYZ, just go out and knock it out. Russell 2000, so the S&P 500 is up 0.02. Oh, that was just some market information I picked up. And happy Monday. So I did my Monday buys last week. I made a video on Friday releasing it. It was my best week as far as dividend payouts. I made over $18.36 in a single week, which is really good out of a Roth IRA that was started just 1.5 years ago. So I did do 3 buys this week. I bought up some Cardinal Health, I bought up Caterpillar, and I bought up Triple M, or 3M, as some investors like to call it there. We had the Fed coming out saying, hey, we are not going to be raising rates. So I kind of posted this on June 18th. June 18th was Tuesday. So I was I already posted what I knew, what I thought was going to happen. 19 June, Fed leaves rates unchanged, and we need to keep pushing rates higher. If we do pop, we can't lower rates. So this is my opinion here. I do think we need to continue to push rates higher. Yes, we're going to continue to invert the yield, but we need to be able to push rates higher to stop the easy money, to stop people from borrowing and just not having, repercussions from what they're trying to do. I don't think it's a good time to be cutting rates currently. I think that's, anytime there's a rate cut, 90 days out, 3 months out, you're going to see some turmoil out in the markets. So Dow Jones, we had a huge gap up. Why did we gap up today? I kind of posted about that. Basically, the Fed, I believe is what it was. Oh, no, they pushed out some news about talks. So they pushed out an article over here talking about how President Trump tweeted this morning that they talked and they had a very good phone call conversation. So that is why we had those gap ups. So just some media getting pushed out. Markets will trend sideways till we get some news. So this was posted out in the morning, my time. Basically what exactly happened, we're going to continue to trend sideways until the Fed comes out and they're basically going to say rates remain unchanged. Who would have guessed? And guess what happened right when they announced rates are going to remain unchanged? Big spike there, and I kind of posted a couple articles there. June's rally could collapse. So one was positive, one was negative. This one, if we do get a rate cut 90 days out, using statistics from the past, normally after a rate cut, it's very stock market positive in the short term. You're going to see stocks bound higher in the short term. But if you look at 3 to 90 days out, that is usually when we're going to get hit by some volatility. So if we do a rate cut here in the near future, look for the market to kind of pull back really hard after we hit that 90-day mark. Now, I'm considering starting my own IRA, a Roth IRA over on M1 Finance. I would be funding it with a certain amount in order to get about $10 of dividends every month. And I would like to start something here with my kiddo. So my kiddo, I like to do sales games with him where I play with his dinosaurs. But in this case, I want to kind of get him started in the mentality of reinvesting dividends, reinvesting cash, and making it kind of work for you. He has his own money. He does little chores, not chores, but he does different activities around the house because chores, I've kind of taught him that chores need to be done around the house. He doesn't need to get paid for them. But if he goes above and beyond doing things that I don't ask him to do, say he comes and makes a deal, he likes to make deals as a 4-year-old. Hey, I'll do this in exchange for that. So kind of an interesting screenshot there. I kind of went over gathering information on that one. VU hit all-time highs there on Thursday, closed at an all-time high, so I posted a little information there. We're on a huge euphoria run. This is what I posted. Could last one more week. So I'm thinking this huge run-up could last at least one more week. Who knows what will take place on next week. We have the G20 Summit. I don't think anything's going to happen out of it. President Trump and Xi, everyone's looking as what these guys are going to be discussing. No trade deal is going to be obviously done because it's too short term. No one's going to get anything from it by announcing some sort of trade deal. and we're at all-time highs right now, so nothing's going to get done. In July, President Trump, because we're already at all-time highs, he may use this time to push new tariffs on China. That may hurt our stock market here in the short term over the next few weeks, but we can take that hit. Say we implement some new tariffs across, some more of their products, we take a hit of 2 to 5%. That's completely fine. We're already trading at all-time highs. Plus, if we don't have a rate cut yet, the Fed will step in the end of July, the end of August here, and they will cut rates to help out with the trade war. So regardless of what happens, everything currently is looking very stock market positive in the short term. In the next 3 to 6 months, nothing can really go wrong as far, my opinion there, nothing can really go wrong that'll cause the stock market to really sell off hard. We don't see like a 10-20% drop off. If we do, the Fed will step in and they'll implement quantitative easing, and that'll push the market back higher here in the short term. And then after January, between January and March 2020, if we have done a rate cut prior to that, that is when I believe we're going to see a lot more volatility and go from there. So Wednesday I put out my video going over what do you prefer, new broker or traditional broker. New brokers don't offer a lot of the bells and whistles that a lot of the traditional brokers offer. So I kind of gave Robinhood, Webull, M1 Finance, Betterment as some of the newer platforms that don't have a lot of information, estimates of your dividends, reports on stocks. Whereas some of your more traditional are Vanguard, Merrill Edge, Fidelity. So I kind of posted a video on that. Looks like it's had a lot of responses and engagement, so I'm glad that kind of got it out there. Had a lot of comments about, a lot of investors use Fidelity, some use Merrill Edge, so a lot of investors are using still traditional accounts on top of some of the newer ones. So I made this little tip on Friday. So some dividend tips. If you're a dividend investor, there's 4 ways that dividend investors make a profit. 1, you buy the stock, it appreciates, you collect that appreciation from the point that you bought it until the point that you sell it. The stock can appreciate by X amount. Number 2, the stock also pays a dividend. As long as you're buying very strong, solid paying dividend companies, it's going to pay you a dividend. When you get paid that dividend, that's cash going into your account. Number 3, that dividend can be used to buy back more shares without any of your own invested capital, and that equals more dividend income for you in the future, which, repeats 1, 2, and 3. And then, of course, every single year, so long as you're buying very strong dividend performing companies, those stocks raise their dividend every year by anywhere between 2 to 10% on average. So if your portfolio is overall increasing their dividend income by 5%, that is a very nice, you're getting appreciation, you're getting dividend income, you're getting those dividends that buy back more shares, you're getting increased dividend income going from that, plus you're getting a 5 or 7% raise each year. Most people only get a 2 to 3% raise in their W-2 job. So a lot of investors, if you're buying the correct stocks, you're getting a nearly 5 to 10% raise on average per year, depending on what stocks you're buying. So I went back through my video library. I was looking at some of the companies that I sold in the past. One of them was Dine. This is IHOP. And what is the other one? Not Olive Garden. They have I can't think of the restaurant here, but this is one I bought a long time ago. I bought this one at $42.65. I always keep track of what stocks I bought, what stocks I bought them at, what price I sold them at. So this one, if I had not sold Dine Equity back when I had bought it at $42.65, it would be up nearly $4,000 just off my initial $3,200 investment. And that is why I was looking, this overall, the financials were there. It was beating earnings quarter after earnings. It was transitioning and getting better. I can't think of the restaurant. I know we have 2 of them in our town. Applebee's. Applebee's is another one here for Dine Equity. They were doing a huge transition, trying to come up with new meals, trying to offer different products. They had a CEO who was an interim CEO at the time, and once they had a new CEO come in, they really turned the company around. They cut the dividend in order to sort of keep more of their cash flow, keep more of their earnings, and that really helped transition this company from where it was at, and it grew in nearly 100% increase there just within about 2 year time frame. So when you're looking at stocks and making your assessment of whether it's a good company or a bad company, stick with your assessment. I initially assessed it and I said, you know what, this is a good valuation, but I had at that time it sold off about 10% very quickly, and you know, I just didn't feel comfortable holding it in the short term because they were going through a huge transition with the CEO there, interim and such. So I did sell it off in a negative. I think it was in the negative, but overall would have been fine. So stock market this week, weekly change: S&P up 2.2, Dow Jones up 2.41, Nasdaq up 3.01, and my portfolio this week up 1.57%. So again, I didn't perform as well as the markets. That is because I did sell off some of my Apple positions. I moved into Google, and I bought SQQQ, which actually took me slightly in the negative and nullified my gains from Google. So Google may have been up 3% this week, but my SQQQ holding was down about 1 or 2%. So basically nullified my positive earnings from Google. So I'm not trying to short this market anymore. I learned I'm bad at predicting short-term volatility and taking advantage of it. So that is primarily it and all I wanted to cover in today's video. If you guys did enjoy the video, hit that thumbs up button below. Subscribe to the channel. Again, I cover the stock market, dividends, real estate, personal finance. I am very sorry if this video is way too long. I can see it's 26 minutes long, but I want to thank you all. If you did reach this, if you reached the very end of the video, drop me a comment, leave me a thumbs up in the comment section below, and also hit the thumbs up there in the bottom as well. So that is it. Thank you all for tuning in. Have a great day. I will see you next time. Bye.